All right, ladies and gentlemen, it's time for us to start. You're welcome to this wonderful advanced strategic section with Precious David. This is EBC Financial Group, the world's best broker right now. No arguments about that. And it's a fantastic time to have this lecture because normally, personally, I charge about 500,000 naira for a lecture like this. And I think I've been doing this for almost 8 years now. I've been professionally teaching people how to trade for almost 8 years now, while I've been trading myself for over a decade. So it's a big deal what you're getting here for absolutely free of charge, courtesy of EBC Financial Group. It's a very big deal, and I want you guys to really take advantage of it. I was speaking to some people. I think that was last week Friday when because we are organizing a kind of a mentorship class. And some of them were telling me their experiences of how much they've paid most of these forex gurus, even in Nigeria. Yeah, most of the popular names, 1 hour, most of them collect about $450 1 hour. The cheapest of them is $350 just for 1 hour, and you will not gain anything. So by the time you really want to gain something, you will now book them for like a week, like maybe like 4 hours, and they will not do it at a stretch. They will do it, maybe they will break it down into 2 weeks, and you will pay. And they have people like that all over them. So when you are getting something like this for absolutely free of charge, it doesn't mean it's free of value. All right, it doesn't mean it's free of value. Please, let's take note of that. It's very, very important that we pay attention to today's lecture, ask questions if you need to ask questions, and then we'll see how we're going to move. Before we move on, I want to quickly say, if you're just joining us and you don't have an account manager, I am recording this section right now. And trust me, you're going to need this recording. So if you want this recording for absolutely free of charge, right now, drop a comment for me. I don't have an account manager. I am new here. I don't know. Maybe you came through Telegram or you came through my WhatsApp link and you don't understand you don't know who to speak to. Drop a comment for me right now. Somebody's going to chat you up. I have co-hosts in the house. I have Faith. I have Ada, I have Sumi. They are there. These are professional traders themselves, senior business development managers with EBC Financial Group, and they are here to actually guide you and hold you by the hand, to actually get yourself started the right way. All right. So you don't need to do it on your own. So make sure you drop a comment and they're going to chat you up. They're going to get to you. And then, so because you are going to get this recording from them and them alone. Can't get it anywhere else. All right. So let's get started. Before we get started officially, I want to quickly say, in case you've not seen it, in case you've not heard of it, guys, we have launched our app finally. Since last year, we have been testing and testing just to make sure that it's not good. It's not easy to be concerned about excellence. Understand? We are concerned about excellence. Anything we are doing must be excellent. Understand? Because our brand is not small. All right. So finally, it's out. Right now, you don't need to go to the website anymore to get anything you want to do. Mostly when it has to do with transactions. For trading, you still have to do it on the MT4, MT5. But for transactions, deposit, withdrawal, account management, copy trading, whatever you want to do, you can now do on the EBC app, which is freshly baked, hot bread right now. Freshly baked, currently on App Store and on Google Play Store. All right, so make sure that you get it. Whether you're using an iPhone or Android, it's currently available at your Play Store, and you can get it there. You can download it there. If you want to get it faster and you want to get there faster, you can get the link to download it from your account manager. You can see that every time I go back to account manager because you can't do without them. All right, so you can get it from your business development manager or your account manager, and then it's easier, it's faster that way. All right. Let's move to why we are here. Guys, let's talk about the magic of trend lines. The magic of trend lines. Before I start, let me quickly say this. I wrote a book. I've written 2 books. But I wrote my first book after losing trades for 2 years straight. I was on a losing streak for 2 years straight. And when I would get my breakthrough, I keep saying it, I didn't get my breakthrough through a big account. I got it through a 5,000 naira account. Right? A 5,000 naira account. That money, I borrowed it to survive. But eventually, I ended up funding that because I just felt like if I lose this money, I will go hungry. And if I eat this money, it's not gonna be enough. 5,000 naira is it's not a big money. And that was then, talk less of now. So I was like, let me just fund this money and see how far I can go. But that was after 2 years of consistent losing. So what happened was, after I lost a lot, but I still kept on believing in this business. You see, one thing I need to tell you is this: believe, your conviction in any business or in any matter is very, very paramount. I tell you, your conviction in any matter or in any business is very paramount. Even when it's not looking as if it's going to make sense, as long as you are convinced that this thing would eventually pay me, keep doing it. Consistency is so powerful that it is a force of nature. It is a rule. The world has been created in such a way that if you are consistent in doing something, you might not see the results now, but eventually you get the results. So for 2 years, I was just going at it, losing money, until I sat down one day after I lost all the, then I was a teacher. My salary was not so much. In fact, my salary was absolutely nothing. Salary I'm earning then is what I used to buy for now in 2 days. Imagine, for a whole month, that's the money I collected. It was about 75K. So I one day sat myself down and I asked myself some questions. Number one, is trading a business that works? Are people really making money from this business? The answer is absolutely yes. And so that time I had 3 parents in the school that was making good money from it. And that was what they were using to fund their family and all that. And I know this firsthand. So I know that this business is real, right? Number two, I need to ask myself, why am I not making profits? Then it means that there is something wrong with me. There is something I'm not doing right. And that was when I sat down to check it. And then I discovered that I keep on jumping from one strategy to another without paying attention to risk management. For me, I thought that Forex was a game that you need to outsmart. For me, I thought that trading was just a game as long as you are smart enough to, if you have a good strategy to outsmart it, a strategy that can tell you when to buy and when to sell, and it's 100% the holy grail. I was looking for the holy grail because I felt that if I can get such a strategy, I will make a lot of money, right? I would be a billionaire overnight. But it doesn't work that way. People chase this dream. It's just like people chasing immortality. I don't know if you've heard of these tales where people chase immortality. They do a lot of alchemy and all that. And then there's a lot of theory around, but it's not proven. It's not true. The reality of things is that death is part of life, right? So the reality of trading is that losing is part of the game. You can't be so good that you don't have a lose. At least you will lose 1 or 2 trades. So it's part of the game. And it helps you to learn faster. It helps you to come up. So when I understood that, I was able to understand that this is called the new shining object syndrome. I repeat, the new shining object syndrome is a syndrome that keeps you as a trader jumping from one strategy to another without perfecting the last one. You don't need all the strategy in the world to make you money. All you need is to pick one that you understand properly and master it. As long as it's giving you 60 to 70% return, you are making money 60 to 70% of the time using that strategy. It is good enough. Just master it. If you can master it and make it your own, you will be able to break out in the business of trading. When I understood this, it was powerful. I had to write a book about it. And in my first book called the Trading Plan, that's the first book I wrote. I call it the Trading Plan. It's a book that talks about how to create a business plan for trading, what lot size to use, what strategy, how to document everything, and how to follow what you have documented as a regimented activity. Because trading, you need to do it as a regimented activity. And that was when I started breaking out. So I'm just sharing this with you because we're going to be talking about the magic of trend line right now. And it's not really a new strategy, but it's something that if you can also understand it and master it, it can give you a lot of results. But that doesn't mean that you forget about the last ones you've also learned. It's not about the strategy, it's about you. It's about your risk management, it's about your emotional management, it's about your trading psychology. 70% of the time. Why 30% is just all about strategy? 70% of the time is about how you manage your emotions in trading, how you manage your greed, how you are able to use risk management most of the times. That's what really makes you profitable. While your strategy is just 30%, gives you an idea of when to buy, when to sell. That's pretty easy. But the major thing that makes you profitable as a trader is your psychology and how you manage your risk. Okay, so let's start. The first thing I want to talk about is what are trend lines? What are trend lines? Now, a trend line is a straight line drawn on a chart, right? connecting important highs or lows in price. Now, when we say highs or lows, I've talked about highs and lows before, right? We talk about highs or lows. What is a high? What is a low? We're going to talk about it again. I'm going to show you what a high is. Every time you see a candle, remember there's always like a wick at the top of the candle. Why there is a wick at the down of the candle? You know the wick I'm talking about? Right. That one on top of the candle that looks like a wick is the high. The last point is the high. Why the one down is called the low. So when we say high and low, you know what I'm talking about. So when we connect, when we are drawing it up, we connect the highs and then we connect the lows in price. Now, in an upward trend, it connects the higher lows, which means it connects the down parts in an upward trend. Because price is going up, we put the trend line below. I'm going to show you, don't worry. In a downward trend, it connects the lower highs in the downward parts, right? Now, the trend line acts like a guide showing the market direction. You see, the number one function of a trend line is to show you the market direction. Why? Because the number one thing you need as a trader to understand is where is the market going. Once you can understand it, you have no problem. If your strategy lacks the ability to reveal to you per time where market is going, you don't have a strategy yet. You are trading blind. So the trend line, the reason why trend line is so important and the reason why it's also very profitable is that the fact that the very first objective of the trend line is to show you if the market is an upward trend or a downward trend. All right. Now, let's talk about the types of trend line. There are two types of trend line. We have the uptrend line. Now, the uptrend line is defined as when price keeps making higher lows, and then you draw the line beneath the candle. This shows buyers are in control, the market is bullish, and price may continue upward. What should you do in this case? Of course, you're looking for buying opportunity. A very good example is what I have on the screen right now. All right, so you can see here that price keeps giving us higher lows. If you are here on this call and you don't know what higher highs and higher lows means, it's fine. I understand. Probably you're a beginner and it's okay. And this is the reason why I have dedicated 2 hours, 45 minutes of my time to create a beginner to intermediate lecture for you, absolutely free of charge, something that is worth over $2,500, absolutely free of charge on our YouTube channel called the EBC Nigeria. EBC Nigeria on YouTube. I have created a 2 hours, 45 minutes lecture. You can break it down into 1 week if you don't have the time to binge watch it at a go. Go and watch it. It will do you so good. It will do you so much good. Right? If you don't understand higher highs and higher lows, because higher highs and higher lows is the fundamental of price movement. That's the fundamental formula for price movements. Okay, so but I will try to break it down here so that you can get an idea of what I'm talking about. Higher highs or higher lows just simply means that anytime price is going up, in this case like this, this is the low here. This low compared to this low, you see that this low is higher than this. This low is higher than this. This low is higher than this. The low is every time price comes down, every time price dips down. After price goes up, it will dip down, go up again, dip down, go up again, dip down, go up again, dip down. That's so every time there is a dip to the downside and then price pushes up, we call that dip the low. Why we call this movement to the upside the high. So this is the highest point price got to before and this is the lowest point. If you check this movement to this movement, this is the lowest, this is the highest. So this is a low, this is a high. Do you understand? So when we say higher lows, it means if you look at this movement now, you discover that every time price dips down, if you compare the point it got to the previous one, this one is higher than this. This is a direct confirmation that price is on an upward trend. And you can see that if we connect the lows, we connect this one to this one to this one to this one using a trend line, we can now see that price is respecting this level. And because price is respecting this level, anytime futuristically price comes back to this trend line, because we can draw the trend line even to where price has not gotten to, it will keep respecting that level. So anytime futuristically price comes back to that trend line, we expect price to bounce from that trend line to the upside, which means if price comes back to that trend line again in the future, I take a buy. As simple as that. My stop loss below the trend line, my take profit at the next level of resistance or the previous level of resistance, which in this case here, let's assume that we didn't see this happen. Okay, let's use this one. Let's say price has come here now and it wants to bounce up. My stop loss is here. I've taken a buy, right? It means that if I'm taking my take profit, where should I take my take profit? I'll be taking my take profits here. Why? Because price got here before it got down. It means there's every tendency that if price comes here again, it might go back down. But as long as price has gotten here before, it will get there again. As long as price has gotten here before, it will get there again. Let me give an example. There was a time in Nigeria last year, the price of $1 to Naira got to 2,000 Naira, almost 2,000 Naira. Let's say 19. I think it got to 2,000 Naira on Bybit. I can't confirm, but let's say 19. Now, right now, price is at 1,300 per dollar. Is it possible that price will get to 3,000 Naira per dollar? Well, I don't know. I'm not sure. But I am sure, sir, that price has every right and there is every potential, there is every possibility that price will get to 19 again. Why? Because it has gotten there before. As long as it has done it before, it can do it again. You understand? So that's how it works. Now, what it means is that if I'm taking let's say I'm taking because maybe there's something that wants to move the price of naira. I want to move the price of dollar up against the naira, and I'm looking at where to take my profit. I will take my profit at 19 because I don't know if price has the potential to go above 19, but I know that because price has gotten to 19 before, it will get there again. So therefore, when you are taking your profits, you take your profits at the previous level of resistance in a buy situation. Okay, let's go to a downward trend. Now, in a downward trend, we say that when price keeps making lower highs, you can draw a line above the candles, right? This shows that the sellers are in control, the market is bearish, and price may continue downwards. Now, let's look at an example very fast. Look at this. This is a downward trend. This is a downward trend line. And you can see what we have here is we are having lower highs. Look at this high and look at the low. Not just lower highs, we're also having lower lows, but we're only concerned about the high. Now, take notes. In an upward trend, and if you want to draw the trend line, you are only concerned about the low in an upward trend. You are connecting the lows together in an upward trend. But in a downward trend, if you want to draw the trend line, you are only concerned about the highs. You are only concerned about the highs. All right. Now, in this high now, you discover that the high, this is the high. Then price went down, came back up. This is another high, right? If you compare this high to this high, which one is higher? The previous one, which is not supposed to be, which means the new one is lower than the previous one. So this is a lower high, 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 this is a lower high. So by the time I'm connecting this one now, where this one started from, by the time I'm connecting it to this point, I can connect and see that price is trading below the lower highs. So this is a downward trend. In this case, what am I looking for? What kind of opportunity am I looking for? I am looking for a sell opportunity. In this case, I am looking for a sell opportunity. Every time price comes back to that trend line, I will look for opportunity to sell. In the future, every time price comes back to the trend line, I will look for opportunity to sell. As simple as that. All right. Now, let's quickly look at how to make money using trendline. Practically, I'm going to be using my phone in this practical section because I know that a lot of us are using our phones, right? So I'm going to be using my phone as well. Let me stop sharing here, then I'll share from here. So I'm sharing my screen from my phone right now. Let's go to the MT5. Let's go to let's do this on gold. Oh, I have I have a trade there. Let's do it on, let's use Euro USD. Okay. Let me remove this moving average. So I want to have it proper. All right. So this is the MT5. And I want us to practicalize all these things that we have learned, right? Now, let's first start with how do you draw the trend line? I'm using my phone. I'm using my phone. All right. So let's start with how do you draw the trend line? This is an EBC account anyway. So please take note. This is an EBC trading account. So how do you draw this trend line now? The first thing is to draw trend line is very easy. What you just need to do, can you see this thing below F? If I click on my chart, on my chart, you will see by the corner of my phone. Let's start from the first stop. You will see something that first one you're looking at. If I click on it, this is what you have. So it will turn my candlestick chart to bar chart. Let's click on the next one. The next one is candlestick chart, right? And the third one is line chart. Let's go back. The third one is line chart. All right, but I want to keep it at candlestick chart. Let's now go down again. You will see something that looks like plus. Have you seen the plus? Good. Go below, you will see something that looks like F. The F is where you add your indicators like moving average and all that. That's not where we are going. Where we are going is below the F. Now, below the F, can you see something that looks like circle, triangle, and rectangle joined together? If you can see it, say I can see it. Give me a comment drop a comment for me. If you can see it, say I can see it on my chart. All right, great. That is where you have your trend line. That is not just where you have your trend. That's where you have all the tools that you want to. That trend, let's click on it. So you have trend line, you have horizontal line, you have vertical line, you have your different tools. There are different tools here that you can pick. Okay. Now, the first one that you are seeing here now is the horizontal line. This is the one I used to mark fixed level of support or resistance. The second one is the vertical line. Can you see the vertical line? Now, the one that is a bit slanty, can you see it? That one that is a bit slanty is your trend line. Now, I will just click on it to take me back to my chart. Now, you can see it on my chart now. That is on the chart. Can you see it up above? It's on the chart now above. That is my trend line above now. What is waiting for me to do is for me to use my finger to now draw what I want to draw. It's for me to use my finger to now draw. For example, if I use my finger to do this now, it's going to, can you see, it's already drawing the trend line. You can see it. So anywhere I put my finger, it will draw a line for me. I can now use my finger to draw the line from point A to point B, however I want it. Now, this is also a trend line. Now, this is not a perfect trend line because, as you can see, I'm just trying to tell you how to draw the trend line. Let's now go and draw a perfect trend line. Now, how do you delete it? Very important though, how do you delete it? Now, let me quickly show you how to delete it. If I want to delete it like this, all I just need to do is to click on it and I should not remove my hand. If I click on it, if I long press on it, not click on it, if I long press on it, you can see to bring delete, H4 trend line, delete. That's deleted. So let's go and look for a very good scenario where we can use the trend line. Let me leave 4 hours alone. Let's go to 1 hour time frame. Let me see if there's anything here. Okay, price is currently consolidating right now on Euro USD. There's a consolidation happening right now on Euro USD. So let's leave Euro USD alone and let's see if we can trade something else. Hold on. Oh, fantastic. Let's go to BTC USD. Though it's not perfect. Okay, but we can just make use of it. Let me draw this back a bit. So this is BTC USD. Can you see that price is giving me higher highs, higher lows at this level here? Let me show you. So this is the first low. Price went up, came down. This low now, compared to this low is higher than this. This one is higher than this. This one is higher than this. So I can use my trend line now to connect this low from here to here. So let's do that together. So I'm going to do this, pick my trend line, then I'm going to connect. This is a trend line. Now, if I move to the 5 minutes time frame, now I've done this on 15 minutes. Let's move to 5 minutes. If I move to the 5 minutes time frame, now what am I waiting for? I am waiting for price to come back to this trend line level again. Once price gets back to this trend line level that I have that I've been able to identify from the 15 minutes time frame, what do you think I'm going to do? I'm going to go for a buy. I'm going to go for a buy. My stop loss is going to be below here. Take profit is going to be above. Now, this is the normal thing to do, but there are other ways to do it so that you can have multiple confirmation. All right, there are other ways to do it so that you can have confirmation on this. Now, one of the things to do is to use candlestick confirmation. For example, in this case now, what we got here, when price got here, it gave us a bullish hammer. The first time it got here, it gave us a bullish hammer. This is a confirmation that this thing is holding up. I would have gone for my buy. Now, if I didn't see this one, this is another bullish engulfing pattern. This candle is bigger than this candle. This tells you that the bullish pressure is bigger than the bearish pressure. Look at this one here. This was a bullish hammer, bullish hammer. All right, these are confirmations. So you don't just jump in. Sometimes you wait for confirmations. This is a bullish engulfing pattern. You understand? So look at this one here. This is a bullish engulfing pattern on the 5 minutes. So these are ways to get confirmation on price and to see what price is doing. You understand? Very simple. Let's look for another instrument and let's do this again. Let me go to GBP USD. GBP USD, I guess, is consolidating. This one since Euro USD is consolidating, and most times, but let's confirm. Let's go to 30 minutes first. Yeah, I know it's consolidating because Euro USD and bullish and GBP USD has been moving together. Let's try USD card. Fantastic. USD card also looking so good, and this is even looking very good. Let's mark it out, and then we'll look at how to even trade this on our chart. So this is a very steep movement, which I believe we can actually look at trading on the 5 minutes time frame. Let's go to the 5 minutes time frame now. So you can see how steep this is. And you can see that the same thing I told you, bullish engulfing, hammer. You can see anytime price touches that trend line, there is always a reaction from the candlesticks. Bullish engulfing or hammer. Those are the two major things you will see. All right. This is the reason why when I was writing my second book, The Almighty Trading Formula, I made it a point that all the candlesticks you need in trading is just 4. Bullish engulfing, hammer, bearish engulfing, shooting star, inverted hammer. Those are the things you need. Every other thing is just waste of time. Guys, we're going to trade USD card together. We're going to trade this together now because we can see that price is coming back to test that trend line. We're going to trade it together. If price gets to that test and then gives us a very good move, we're going to be taking this instantly. We're going to put our stop loss below here and just below the trend line. Our take profit is going to be here. Now, please take note of this. This is just one way to use the trend line. I'm going to be teaching another way to use the trend line very soon. Now, what we are using the trend line for here now is continuation pattern or reversal pattern. So this is a continuation pattern or a reversal pattern. In this case, we are expecting that price is going to reverse here and then continue to the upward trend. We are trading with the trend, right? So this one is with the trend. We're not against the trend. So we believe that price comes here now, it's going to respect this trend line because this trend line is a dynamic level of support. It has been respected multiple times. And then from here, it's going to pull back to the upside. And then once that happens, I will take my buy here. My stop loss is going to be below. My take profit, I can take it here or I take it here. Like I told you, price has gotten here before, so it can get there again, or I take it here because it's another level that price has broken below. Now, this is just one way to use the trend line. There's another way to use the trend line, which is the breakout formula. Trend line can also give you breakout trading. Now, what it means is that if this candle now that is trying to push, that is retesting this particular level now, if it breaks below this trend line and then retests this trend line, that's a breakout. Anything that makes it to close below this trend line, anything that makes the body of this candle to close below this trend line to somewhere around this point, this is no longer an upward trend. That is the beginning of a downward trend. All we just need is for price to go back to that trend line, retest it, and push away from it. Once that happens, you are moving to the downside. So once you see a breakout, what you want to do is to wait for price to retest, and then you take yourself from that retest, and then price pushes down. Okay, so this is another 5 minutes candle forming up already. We're already very close to the trend line. I want to see what price wants to do here so that we can take our trade. But from what I'm seeing right now, price is retesting a particular level which is in alignment with the trend line already. If you can see that level, it means you can look at the level here. This is a level of resistance that was broken. It's now a support, and price is trying to struggle. And you can see it's aligning itself with the trend line perfectly. So what I'm expecting is price to attack this level, try to break it a little bit, and then end up as a bullish pin bar, or give us some kind of candlestick pattern that signals the beginning of an upward trend. Now, take note, it's not every time that you will get a signal. It's not every time that you will get a candlestick confirmation. All right, that's why sometimes you can wait for confirmation. Sometimes you might decide not to wait for confirmation. It's not every time. But when you wait for confirmation, you take fewer trades, and those fewer trades now helps you to make more money. It's not about the number of trades you take. It's about how you are able to enter the right way. All right. So sometimes not trading is a decision in trading as well. Like in this case now, you can see that I don't think we are having any major confirmation right now, because you can see the candle is already flying up based on the fact that price was actually retesting a particular level here, and which is aligning with the trend line. So most times these things you will learn them by experience. Now the experience in the year now, if I'm going to document this, it means if I see price around a trend line that is aligning with a former level of resistance that has been broken and is being retested, I don't need to wait for a confirmation. I can jump in my stop loss below here, and then my take profit above. You get it now? So as you practice it, you begin to learn more. As you practice it, you begin to learn more. Now this is for buy, right? Let's go and look for sell opportunities. See what's happening, guys. Imagine we take that trade. By now, we would have been in massive profits. Let's go and look for sell opportunities. Let me see if I can get one on USD/JPY. Yes, I think I can. Let's jump to 15 minutes. It's not looking too good on a higher time frame, though it's looking very good on a lower time frame, but not looking too good on the higher time frame. You should draw it from the higher time frame to the lower time frame. So let me look for AUD card. I want to show us AUD CHF. Let me see anyone on a downward trend. So this is currently consolidating, but before price started consolidating, there was a downward trend here that we can actually pick out. This was it. Can you see? So before price started consolidating, there was a downward trend here. So in this case, what I would have been doing, let's go to the 15 minutes time frame. So you see it. Every time you draw, so what the rule is, you draw from a higher time frame, but you trade it on a lower time frame. All right, so this is on the 15 minutes. I drew it on the 1 hour, so I'm moving to 15 minutes. If you draw it on 15 minutes, you move to 5 minutes. So you look at this. Every time price gets to that trend line, it bounces back down, and then it gives you a confirmation. It gives you a confirmation. You would see either a shooting star or a bullish engulfing pattern, or you see what is called a hanging man. So what is a hanging man? A hanging man is a bullish hammer in a resistance. So anytime you see a bullish hammer, this guy here, this is a bullish hammer, this guy here. Let me increase this. This guy here is a bullish hammer, guys. This is a hammer, right? Everybody knows this is a hammer. But this hammer should be on a support. So anytime this hammer is seen on a resistance in a downward trend, this is not a hammer, this is a hanging man. We call it a hanging man. It's just hanging. It has no base. This is a signal for a sell. All right. I hope I'm not confusing you. Okay, so in the dictionary of trading, or candlestick, we call it candlestick Bible. This guy here is a hammer in a resistance. A hammer should be on a support to make it powerful. But when you see a hammer at a resistance, it's a hanging man. It's just hanging from the resistance, and most likely than not, price is going to go down, mostly in the downward trend. All right, so anytime you see this happening, this is a shooting star. Look at the shooting star here, and then we have a bearish engulfing pattern. This and that shooting star. So these are confirmations. Sorry, these are confirmations to the sell trend. Anytime price get to the trend line on the 15 minutes time frame, confirmations. This is a bullish, bearish engulfing pattern, and like that, and like that, and like that. All right. So it's very, very important that you understand this, because once you understand it, it makes it very easy for you to take your trade and for you to start winning. All right. Now, let's talk about breakout. And that will be the last thing I'm going to talk about. Let's talk about breakout. How do you use trend line for breakout? How do you use trend line for breakout? Let's go to GBP JPY. I don't think we've traded that. We've looked at that for a long time. Let's start from the higher time frame. So I'm going to go back in time a little bit. So let's pick this one here. So what we are saying is that anytime, this is not really a perfect trend line. This is looking more like a consolidation. So let's look for, okay, this is looking very good. So I can connect this low, connect it up to this point here, right? We can see this here as well. So this connected 1, 2, 3 touch points. There can be other trend lines, but these are the ones I want to connect. Now, at this point, price was on an upward trend. All of a sudden, we saw this break in structure here. Now, this breaking structure is a breakout of the trend line. Anytime you see this breaking structure, yeah, this is a breakout of the trend line. Now, once you see this breaking structure, what's going to happen here? What you can do, the best way to take this trade, if you don't have time to wait for confirmation, sometimes you might not get a confirmation because you can see this, there was no retest here, is to immediately this candle closes below the trend line, take your sell. Put your stop loss at the upper part, at the high of the candle that broke that trend line. Take your sell, put your stop loss at the upper part of the candle that broke the trend line. In the case of a buy, what you would do is to take your buy and put your stop loss. Let me look for a buy scenario. Okay, great. This is a buy scenario here, even though it's not really perfect, but let me just hold on, please. Good. So let's look at this one. So this was a buy scenario. This was the case of a buy scenario here. And we saw price eventually breaking above the trend. Now, in this case, there was a retest. If you check here, there was a retest after price broke. After the candle, the body of this candle closed above. We saw price coming back to retest and then pushing away. But what I'm telling you is that you don't need to wait for this retest. Once the body, make sure the body of the candle closes below or above the trend line. In this case, above the trend line, take your buy. Put your stop loss below that same candle that broke that trend line. Just put your stop loss here. Your take profit, leave it open most times, and then target the next level of resistance to get out of the trading profit. Eventually, you will be able to catch this kind of moves in a breakout. For using it as breakout strategy, it's very, very important. So let's use this let's go and check gold. Though I have a trade running on gold, but let's quickly check gold. And then we're going to go back to USD. Let's look at USD card as well. Oh, my chart is, sorry, hold on. Let me share again. All right. I think we took that trade on the 50, guys. You can see what happened to USD card. That trade we missed. Price is still going up. Price is about to break that level now. So imagine you take this trade at this point here. This would have been a very good profit. Now let's quickly try as much as possible to see what happens on gold. Let's go to gold and let's see. So currently, let me move to 1 hour. Gold is currently consolidating anyway, from what I can see now. But let me go to 4 hours. On the 4-hour time frame, gold is still very much consolidating on the 4-hour time frame as well. But I can see that there was a breakout. Before now, there was a breakout. There was a breakout here. So we're going to map this out properly. So this was a breakout. Let's go to 1 hour to check this very well. So if you check the 1 hour time frame around this point here, you see that gold actually gave us a breakout of this particular structure, of this particular trend line here. We're only connecting just few of it. So we connected this high. So we connected this high to this one, to this one, to this one, right? And then we saw price breakout here. This was a breakout. Now what I'm expecting now is that on the 15 minutes, we should see some level of push to the downside to come back to retest that particular level that price has actually broken out from. All right, so what we are expecting for gold now is a retest of that particular level that price has broken out from. So if I go to the 5 minutes time frame, I can also see other trend lines, right? That price is actually trying to form as well on the 5 minutes time frame. So if I check here, I can also pick this trend line here. Look at this one. And then I can also map another one down. So anytime you have something like this, we call this a trade channel. So anytime you have two trend lines, price is consolidating and is respecting two trend line levels, we call this a trade channel. So you can see the trade channel here. It's like an open funnel where price is currently respecting. Now what it means is that I'm expecting price to actually push. Price is at the middle now. So I'm expecting price to push down to this point or to push up to this point for me to take my trade, either for a sell trade or a buy trade in this case here. And then if price breaks below this trend line, I take a sell. My stop loss is going to be above the candle that breaks that trend line. If price breaks above, I take a buy. My stop loss below that candle. So you can see the way I can remain on gold now for the whole day, just waiting for what is going to happen. Just waiting for 4 things. I'm waiting for 4 things to happen. Number 1 is that price will come here and then give me a bullish engulfing pattern or a hammer, and I take my buy, my stop loss below here. Or price goes back here, gives me an inverted hammer or a bearish engulfing pattern, just like what it did here, right? Let me increase this so you can see it. You can see what it did. That's a bearish engulfing pattern. So if price does that again, I take my sell, my stop loss above, my take profits below. My take profit is going to be below the next trend line. And then if price breaks out, which is the third scenario, breaks out for a buy, I take my buy, stop loss below the candle that breaks that thing out. If price breaks out for a sell, I take my sell, and then my stop loss is just going to be below, above the candle that breaks the trend line for a sell. As simple as that. So you can do this on your own on gold and then just watch it for today and see how price is going to play out and see how you can take advantage of price. Very, very simple. Do we have any questions? So far, so good. Any questions on this? So far, so good. All right, I can see your feedback. Okay. Any questions? If there are no questions, I want to quickly thank everybody who was able to join. Guys, let's take some trades together beyond trend line. I think today is Monday. We should be able to, make money as well. So while we are waiting for these gold trades to play out, let's see how we can take advantage of Euro USD, that consolidation going on Euro USD right now, on the 5 minutes time frame. Okay, trend line and moving average, probably another class we're going to look at that. But trend line and moving average are very similar. So most times, if you're using moving average, I don't need to use trend line. because most times what the trend line is doing is same thing that moving average is doing. So the trend line is just that it's more manual. Why moving average is automated, because as price is going, it's going to be plotting itself. But trend line is more manual. You are in control of what you are doing. But the moving average, the system is in control. So moving average and trend line, they are very synonymous. That most times using two of them is not advisable, because is both of them are actually looking at the trend, and both of them are kind of a trend line. You understand? Okay. So let's quickly take some trades very fast. We're going to take a trade on Euro USD now. So price is currently consolidating on the 5 minutes time frame of Euro USD. We are expecting a breakout or price to actually come back to the downside. And if the breakout happens, it's going to be massive. I can see a very massive breakout if that happens. So what we want to do is we can go for a buy stop and we can go for a sell limit. So I'm going to be giving us a complicated trade. So it's going to be a sell limit and a buy stop combined. What happens is that what we're going to be doing is we are going to be going for a buy stop here. It's too far. So buy stop price is going to be there. Why we would have our sell stop. Let's do a sell stop instead, not a sell limit. Our sell stop is going to be here. And then the stop loss for both trade is going to be in the middle, which is going to be here. So I'm giving us this trade now as so Euro USD buy stop. Our entry price, we're waiting for a breakout. Our entry price is at 1.16469. TP, leave it opened. SL, however, is at 1.16428. Okay, then we have the sell stop. Our entry is at 1.16407. SL is at 1.16428 as well, while our TP is going to be, let me check, 1.16312. 1.16312. Okay, so you can take this trade on Euro USD. Why we call it a day. I'm gonna be seeing us on Wednesday again. Now the link for this class was recorded. Let me quickly stop recording. The link for the class, I'm